Nigeria's inflation rises by 0.1% to 15.7% in February 2022 on the back of rising fuel subsidies. Central Bank of Nigeria issues more guidelines on foreign currency. Nigeria records negative trade balance in fourth quarter of 2021, plus oil holds near $100 as Ukraine talks intensify. This is Business Express coming to you on the network service of the NTA. I am Leah Kating. Babatunde. The International Monetary Fund, IMF, projects that Nigeria might use 93% of her revenue to repay debts by the end of 2022. The fund also predicted that by 2026, 139% of the nation's income will be used to pay debt interest. This projection was provided in a report where the IMF said that the interest to revenue ratio would rise steadily from 86% in 2021, adding that a high interest to revenue ratio puts the country at fiscal risk. The report says although interest repayments were only 2% of GDP in 2020, about 89% of federal government revenues were absorbed by interest repayments, reflecting poor domestic revenue mobilization capacity. The Central Bank of Nigeria, CBN, has barred cash collection operators, also known as Bank Neutral Cash Hubs, BNCH, from performing lending and investing activities. The Apex Bank also barred them from receiving, disbursing, or engaging in any transaction involving foreign currency. The Apex Bank stated this in its guidelines for operation of BNCH. The CBN on the guideline posited that the key objective of setting up the BNCH was to reduce risk and cost borne by banks, merchants, and huge cash handlers in the course of cash management activities, deepen financial inclusion, and leverage on shared services to enhance cash management efficiency. It, however, noted that a BNCH may carry out receipt of Naira-denominated deposits on behalf of fiscal institutions from individuals and businesses with high volumes of cash, high volume cash disbursement to members of the public on behalf of financial institutions, as well as any other activities that may be permitted by the CBN. The Apex Bank said that deposit money banks and cash processing companies can apply for registration of a BNCH. The financial requirements for the approval to operate is a non-refundable fee of 600,000 naira. The bank also placed a threshold of 500,000 naira for individual deposits and withdrawal limits and 1 million naira for corporate entities. Latest foreign trade statistics on the fourth quarter of 2021 as released by the National Bureau of Statistics show that Nigeria's total trade stood at 11.707 trillion naira. Total exports trade value was 5.766 trillion naira, and imports trade value stood at 5.94 trillion naira, which indicates a negative trade balance of 173.96 billion naira. Total trade in the fourth quarter of 2021 was at the end of 2021 was 10.472 trillion naira. The NBS data added that Nigerian export trade was mainly dominated by crude oil, which amounted to 4.269 trillion naira, followed by natural gas, liquefied gas, floating or submersible drilling platforms, and urea. On the other hand, major products imported were motor spirit, followed by durum wheat, and rolled iron and steel. The top 5 major trading partners in exports during the fourth quarter of 2021 were India, Spain, France, and the Netherlands, and also Indonesia. Top imports trading partners during the period under review were China, Belgium, India, the Netherlands, and the United States of America. Rise in the price of goods and services driven by fuel scarcity across the country, which started in February 2022, has driven the nation's inflation rate upwards. Figures released by the National Bureau of Statistics indicate that the Consumer Price Index increased to 15.7% in February 2022. And Muplang Dakok has that report.
Consumer Price Index provides a general measure of changes in the prices of goods and services purchased by households across the country. For the month of February 2022, the index increased by 15.70% year-on-year, 0.1% higher than 15.60% recorded in January 2022. Food inflation in February 2022 increased to 17.11% from 17.13% in January 2022.
This rise in the food index was caused by increases in the prices of bread and cereals, food products such as potatoes, yam and other tuber, oils and fats and fruits.
On the crisis in Ukraine, the Statistician General is worried that if not halted immediately, it may increase the current inflation figures beyond what they are for Nigeria and other developing countries.
In the short run, we may be gaining as an economy, probably because the cost of price of oil at the global market will be going up. But in the long run, certainly we will not be gaining, because it will have the tendency of also bringing in inflation into the country. And even the projection made for the growth of the economy for the year 2022 certainly will remain a mirage to be achieved.
Both urban and rural inflation increased. In Abuja, Muplang Dakok.
Thank you, Muplang. And that report on the rise in inflation in the month of February 2022 after recording a fall in January ushers us into a discussion for today. As the nation faces fuel shortages which have helped push prices higher, we'll also be looking at the foreign trade statistics also released concurrently by the NBS. Our guest is an economist, Tefa Abraham, and as always, we always love to have you on set. Good
Thank
afternoon.
you very much. My pleasure to be here.
How are the queues with you?
Yeah, cool. We're doing our best.
The
ensuring
weather,
that we
the
stay
NEPA,
positive.
and every.
Yeah, we're doing our best to maintain equilibrium. That's against all odds, to stay positive.
Okay, so the CPI, of course, a lot of people expected it was going to rise beyond what we have. What was your expectation before now, and what's also your takes? What will be your takes on the rise we have just recorded?
Okay, great. If you look at our consumer price index, which totally helps in measuring inflation, it's been on double digit for a long time. And as of March 2021, that was the period where we attained almost 18.something% with inflation in general, and then we started declining all the way down. So in terms of seasonality on quarterly basis, this is a period where inflation is usually high. Markets reopen into the new year, expectations are building up, fees are being paid, farmers are going back to farm, all this kind of shortage happening in supply. And then for Nigeria in particular, the stress of food shortage in terms of supply and the structural rigidities that's being driven by epileptic power supply, push up in transport costs, energy shortage, all these things builds up into increasing prices for February. So when you take a general basket of average price of goods and services across the 36 states of Nigeria, including FCT, what you have is a situation where average prices generally increased to 15.7%. So the expectation is within tolerable range. It was expected because it's a period where demand shortage, supply shocks, and also structural issues affected prices in general.
Okay, we didn't expect we're going to have the fuel crisis we're facing, and of course it has lingered on till this moment, and the fuel shortage is what the NBS attributed to be the driving force for the inflation in last month, and a lot of people will be wondering how would this be telling on the GDP of the nation?
Okay, so what you have is consumer price index is calculated by a combination of all manner of goods and services within the sectors, across all sectors, and then you find their average across the 36 states and FCT, and then you average to arrive at a general one for the country. So the concept there is that we realized that for February, there was a lot of fuel issues, PMS issues, shortage, everything leading to increase in price. And in a general equilibrium model, fuel price, the price of PMS, is one commodity that once that price goes up, every other component follows suit. So that was why the NBS anchored the rise in inflation to that reason. And remember, we must also commend the National Bureau of Statistics for being fast with the data, because this data we're talking about is for February. So the whole essence is to ensure that as timely as the data is, it helps investment and business units to take decisions, factoring in the effect of consumer price index on the overall goods and services. So it's pretty clear that once we address the fuel shortage, then we'll have price also maintaining a downward trend. But it's important to complement our dependence on PMS with other forms of energy, like coal, like cooking gas, and the rest. But within the energy matrix, all these things are connected, such that the price increase in one leads to the price increase of the other. So looking for the major factors driving these increases and to address them, like for example, the low power supply from all the dams attributed to low water levels need to be addressed. Complementing energy supply through solar and other sources of energy also needs to be addressed. Then ensuring that marketers are also not hoarding or taking advantage of customers is also very important at this period.
But while we're looking at all these concerns, then the recent one is the diesel, the jet fuel, the electricity you just mentioned. Is this something that we should be worried about, or is it the usual passing phase of the march that happens perennially?
This season, economically, the first quarter is not associated with shortage of aviation fuel and diesel crisis and all those other observations. So it's a unique phase in our economic management era. So the idea is that, provided we know the factors driving this shortage in supply and pushing up prices to go up, it's important to address them as they come. Because within the energy basket, you have gas, you have diesel, you have kerosene, you have all other derivatives. And once there's a change in the price behavior of one, it affects others, because it's like a click in there in that energy basket. So you'll be amazed to know that to supply gas, they need fuel. To supply fuel, they need power like electricity, and they need PMS in vehicles that will distribute them. Everything is just connected. So it's like a domino effect. So it's important to address this shortage so that all these structural effects we're having across sectors, aviation, road transport, rail transport, consumer prices, housing, and consumables, all will be addressed, including the price of cooking gas as well.
Okay, now just yesterday as well, the NBS raised concern about the war between Russia and Ukraine, with the fears that it could further affect our consumption, and overall the index will be affected. What is your position on that?
The NBS also released the international trade statistics, and if you look at our top trade partners in terms of export, you have France, Spain, Netherlands, Indonesia. For the oil sector, we have China, we have India, and then some other countries as well. Our trade with Russia and Ukraine is unique in the sense that it is largely non-export driven, I beg your pardon. And that's the area where the central bank, the government, Exim Bank, everyone is hoping that we'll be able to improve our export for non-oil exports so that we can earn more revenue. So Russia, Ukraine is giving us that external shock from non-oil exports. Serious sale of seed oils, sesame seed, very unique non-export that we are hoping that if our agricultural value chain is threatened, we will gain a lot of cash from these countries. So the crisis, both for Russia and Ukraine, is bad for Nigeria. This is not a position where Nigeria will say, oh, I'm for Russia or for Ukraine. However it goes, we are being affected by Russia-Ukraine crisis. So for us, our hope is that this crisis is settled in the most amicable form, as nice as it can be, because it's affecting us especially on the non-oil export. So by the time you work out that value chain process, also including the supply of PMS we get, or refined crude that we get from Russia's channel as well. These are some of the things that may explain the overall shortage, but it may not be the immediate factor. The immediate factor is that our refineries are not producing, our refineries are near zero capacity production. So revamping this efforts, I beg your pardon, is also very important. Then hearing all the figures we pay, paying salaries or maintaining the refineries, and analyzing them as per the cost of raising a particular refinery becomes very, very amazing, in the sense that it's difficult to understand why we can't just raise new refineries, but rather use the fund to maintain. But I understand that these things can be complicated, more than a 5-minute talk on TV. So the critical point is ensuring that as even all the supply channels we have for PMS, we should also be scouting for new markets. The way we scouted for India to sell our crude oil to when US went black on us during the COVID-19 period, we must also keep finding new markets to get our refined PMS, because any recommendation we give may be in the long term. But as of this evening, tomorrow morning, Nigerians need refined crude, and we need markets to get them from. So I believe Foreign Affairs, NNPC, all those stakeholders, they are doing their best to help us find new partners so that we can keep meeting the supply of PMS. Otherwise, if the supply gap is not addressed, it may not end anytime soon, the long queues we see. But I believe that the economic management at the level of the Federal Executive Council, at National Assembly, and at the very high level, I'm sure they are doing a lot of they are putting a lot of effort to address the supply shortage.
Okay, while we're still with the supply, and of course with the trade data released yesterday that you have rightly pointed out, of course it was a negative balance. Then we're having this crisis at hand. What does it mean? Great.
A negative trade balance is export minus import. If export is greater than import, you have a positive or surplus trade balance. If import is more than export, you have a negative trade balance. The principle of international trade in economics expects that we have a balance of trade position whereby export is always equal to import, and it affects our balance of trade and balance of payment account, especially from the current account aspect of it. But for a country like Nigeria, it is not possible that we will have a surplus balance of trade that will be in quote favorable.
Why?
Because we are import dependent. We import capital goods that we use to produce our own goods. So what the best we can do is to close the gap in the deficit trade between export and import. Because check this out, our major where we import from, we sell oil to China, to India, and then we import from France, Spain, Netherlands, all other commodities we want, from including, guess what? Our export is crude, our import is refined PMS. So you can see the issue. And then check out all the agricultural shortage in terms of capital goods that we need to sustain our own economy. So I think for the healthiness of our external balance, it's important to ensure that we strengthen our domestic capacity to produce the things we import. And if those things are largely capital goods, including cars, vehicles, machines, sewing machines, it's not likely that we'll be having export greater than import anytime soon, unless we just totally cut out on import. And if we do that, it might lead to trade retaliation from other countries. So, but what the NBS statistics showed, which is very nice, is that the negative terms of trade is very narrow, and we should continue putting our effort to ensure it stays narrow, and also ensure that the goods that we increase its export value for are those that are non-oil sector driven, because this whole idea of exporting crude oil as our major export and refined crude oil as our major import is not making sense in terms of our external account balance. So strengthening the export sector is what is really important. But by and large, the narrowness in the negative terms of trade is something encouraging, so that it will not become too wide, because already the total value of our international trade is 11.7 trillion, which is almost the size of our national budget of 17 point something trillion. And you have exports accounting for 5.8 trillion, while import is 5.9 trillion. So you can see the gap is almost equal. So it's important to sustain that effort to increase export value of our goods.
Now before I let you go, because I'm told my time is up, in all these countries, there's no African country, and we're talking AFCFTA.
Yeah, it's important to continue to expand our trade relations, especially among ECOWAS as well, because it will amaze you to know that we have a better trade possibility within the region than if we go outside. But one thing about international trade is one platform where economic war can easily start. Once you show other countries that you are banning their own imports to promote your own export, they will retaliate. So trade war, the tariff war, the trade policy war, it happens especially on the level of international trade. So the African Continental Free Trade Agreement gives us the ability to freely sell and freely buy. So what is important for Nigeria is to strengthen the packaging of our goods while taking advantage of our trade within the ECOWAS region as well.
Okay, I must sincerely thank you, Tafa Abraham,
thank
for
you very
always
much.
making it fun time with us and breaking it down for everyone to understand. Thank you for coming.
You're most welcome.
Yeah, so we move on. The Revenue Mobilization, Allocation and Fiscal Commission, RAMFAC, says it has concluded the process of reviewing the current revenue allocation formula for governments in the country. Chairman of the Commission, Elias Mbam, gave the insight while declaring open the 56th Federal Executive Council meeting of the Nigerian Civil Service Union in Abuja. Neka Oko reports.
With the law, when you finish, you present it officially to the president, who will thereafter lay it before the National Assembly. We have finished our own. We are waiting for a confident date for the president to receive our official report.
Under the current sharing arrangement of the Federation account, the federal government takes 52.68% of gross revenue in monthly allocation. States get 26.72%, while the local government councils get 20.6%.
We did a great job. We did a lot of consultations, and all the issues that were raised by every group was taken into consideration in coming out with what will be fair to the majority of Nigerians. So I will be surprised if any group does not accept this as fair.
If approved, the revised revenue allocation formula will put to rest agitations by states and local governments for a review, as well as the inability of the current vertical formula to adequately address the current mismatch between statutorily assigned functions and tax powers of each of the three levels of government. Meanwhile, the Nigeria Civil Service Union Federal Council, at its 56th Federal Executive Council, has bemoaned the current fuel and power situations in the country and demanded for immediate solution. In Abuja, Neka Oko.
Oil prices fell below $100 a barrel in a volatile session on Wednesday as it came under pressure from signs of progress in Russia-Ukraine peace talks. Ukraine's president said the position of Ukraine and Russia was sounding more realistic, but time was needed. Brent crude fell 54 cents or 0.5% to $99.37 a barrel in early trade, having traded as high as $103 earlier. And of course, the numbers have turned around with that announcement by Ukraine, and the prices are now high above $110 a barrel. We move straight to the commodities market.
Hello, this is the Global Markets Review. Global markets are broadly positive ahead of the conclusion of the Federal Reserve's two-day meeting, where the central bank is widely expected to raise rates by a quarter point, the first hike since 2018. European stocks were trading higher on Wednesday as global markets await the latest monetary policy figures and economic forecast from the U.S. Federal Reserve. DAX topped 2.49%, FTSE 1.04%, and CAC 40 2.23%. Shares in Asia Pacific were higher in Wednesday's trade as Chinese stocks saw a strong rebound following recent heavy losses. In Japan, the Nikkei 225 climbed 1.64% at 25,762.01. Shanghai Composite 3.48% at 3,170.71. And the Hang Seng Index also topped 9.08% across 20,087.50. U.S. stock futures rose in early deals as traders tried to build on the sharp gains from previous session, while Wall Street awaited the Federal Reserve's latest monetary policy decision. Futures contracts tied to the Dow Jones Industrial Average climbed 293 points, S&P 500 1.10%, and Nasdaq Composite also topped 1.77%. Meanwhile, African markets were mixed. South Africa's JSE Africa Top 40 was positive. Tunisia's Tunidex and Namibia's overall index were negative, while other stocks were muted. That's the Global Markets Review. I am Boss Day Able.
Thank you. And that was the Global Market Review, actually, another commodities market. Now back home in Nigeria, before we leave, I would like to inform you that the NGX All Share Index this Wednesday reversed losses to close positive at 47,364.46 basis points, with market capitalization at 25.526 trillion naira, cancelling the previous day's losses. Of course, 145.8 million shares worth 2.5 billion naira exchanged hands in 4,113 deals at the end of today's trade. And this is where we end this edition of Business Express. The program is going to return definitely tomorrow morning at 9:30 p.m. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter on the NTA's handle. Do have a nice evening.